sometimes very successful people in business make the worst traders. Sometimes they have the biggest challenge. And the reason is because they're very dominant personalities, usually type A personalities. And so they like to dictate, they like to control, they like to dominate. They like to say, I'm going to make this happen. Okay. And that can work very well in business. You need that in a leader. That's awesome. That's the right place for them. But in trading, you don't make anything happen, right? I can't make anything happen in the financial markets. You can't. No one person can.
What's up, everyone? Welcome back to another trader interview here on YouTube. Hope you're doing fine as always. Today I'm sitting down with Barry Burns from the channel TopDogTrading. So what I would like you to do is, if you like this interview and if you got something useful out of it, make sure you comment below in the comment section with your best advice, your favorite advice from this interview. Other people can read it. You'll be able to like other comments as well. I want to hear your thoughts on this. So without further ado, let's dive right into the interview.
Well, since the last time we talked, I'm still doing what I've always done, which is day trading futures and then swing trading options. So getting even more heavily into the swing trading of options, and that's been going, actually both have been going really well, better than ever before. So I'm even a better trader than the last time I talked to you and doing better. So that's great. It's always been going good, but now it's going even better. And then added cryptocurrencies and NFTs to the portfolio, and don't day trade those, but actually NFTs, I haven't sold any yet, so I don't know if I can really say I'm trading them, but I've bought some, very selective about it, not buying a lot of them, not flipping them, not doing that kind of stuff, just finding some good, a few good quality product or projects and then getting into them. We'll see. I'm watching the market, so there may come a time when I decide to get out of some and take some money. If I do, I'll turn around and get back into others at some point. Crypto, we'll just see. Again, haven't really been trading it as much as just buying it, looking for certain coins. Actually, I've got a lot of different coins, so a lot of pretty diversified with the cryptocurrencies. And so we'll see. We're back up to all-time highs again on Bitcoin. So watching this level, see if we can break through it. And I did sell a couple, a little bit yesterday, and not too much though, but just like to take profits, as we're going along. So I think Bitcoin's going to keep going up, but I got, the Ethereum and Bitcoin are great. And so I've got a lot of those, but I also have smaller cap coins because I think you can make bigger multiples on those. And so far that's been very true. So I'm not really buying more Bitcoin and Ethereum. I'm buying more of the smaller caps, or have been. And actually bought just a couple of others the other day that are very inexpensive, but have a lot of room to run. So yeah, that's been just, gobs of money. But that's the kind of stuff that I play with, and that is fun. It's still very new, and it's interesting to get involved in it and watch the news and how the government reacts and different countries getting involved and what the banks think about it, and lawsuits with XRP. And it's crazy, but I'm very optimistic about the space. So I'll probably sell most of everything as we get toward the top of this 4-year cycle. That's at least what's in my mind right now, but I'm just watching it day by day, and then maybe get back in a year from now. So that's my sort of overall game plan that's in my head theoretically, but I'm watching the charts. I'm a chart trader, so I watch the charts, and we'll just take it. Then probably when it comes back down, I'll dollar cost average back in, and for a long term. So, but I think really it's an unusual time, maybe the best time, financial opportunity for people in generations, but it's also very risky. So, got to use money that you can afford to lose. That's for sure, because who knows? We're in uncharted territory here, literally. So, but it's fun and exciting, and I'm enjoying it. And so far, it's been very profitable.
Awesome. So interesting that pretty much all the people I talk to, again, that used to trade Forex or futures or something, they all move a little bit more to cryptos now. Now, what kind of technical patterns are you looking at to define if it's near a top or if you want to get out of it? What are some things you would look at to do that?
Well, again, we'll have to see. There's several different topping patterns that I normally watch in stocks and futures and options. So now, whether those will apply to cryptos or not, again, I don't know because crypto moves very differently and has more volatility to it in general and more emotional and news based and rumors. A lot of rumors will make it go up, rumors go down. You got Dogecoin, and all these kind of things, and that really have no value to them, but they still move up like crazy. So it's a different animal. So kind of looking to see, again, what's in my mind right now is a blow off top to see if we get a lot of retailers coming in, start coming in, toward the end, buying when it's too late, the typical retail mentality, jumping on board something, having FOMO, fear of missing out, and then coming in when it's too late and then looking for volume spike, see if we get a big parabolic vertical spike up on big volume. If so, then that's one thing that I'll definitely look forward to exit. So, and I think we should be able to get, I don't know, again, it's all theoretical. I have no idea what's going to happen, but just in my mind, I'm looking for Bitcoin, to get up to $100,000 at least, or in that neighborhood. And then we'll just see. It's funny. I follow a lot of people in the industry, and some people say, "Oh no, this is the top right here because we're at our previous high," and others. So I'm not surprised to see that we're getting resistance here. That's normal, and I totally expected that. A lot of people have that $100,000 mark, give or take, in their minds. Of course, big round numbers people respond to. Others are saying like 350,000, all that kind of stuff, and I think we may get there maybe eventually, but I'm not so sure about us getting that far in this cycle. So, but again, I'll watch and we'll see. I'm not going to pretend that I'll nail the top, but if I can make some, good money, get out, I'll take some profits along the way, and definitely not going to ride it all the way back down. That's for sure.
And if I'm not mistaken, in your trading for futures, you don't really look at fundamentals that much. You don't look at the news or anything of the sort. Do you pay more attention for cryptos, or is it kind of not important for you?
Yeah, for cryptos, actually, it is different. Yeah, for cryptos, I'm definitely watching the news every day. I've got certain channels that I watch, and I'm staying up to speed with all the news. But even there, it's challenging because I listen to it so that I'm aware of it. But big money is coming into crypto, has already come into crypto, the financial cartel, if you will, which is a bunch of different hedge funds and banks and the government and Lord knows who all is involved in that. And so, they're not going to show their hand. So the news you have to take with a grain of salt. And, and then too, you got to figure, well, the news media is owned by just a few, basically like 10 people on the planet. And so it's like, the news is getting filtered and they share what they want to share. So I don't pretend that what's being shared is the reality. I consider like to the news media, the matrix, they're going to show you what they want you to see and what stories they want to run that day or that week or that month. And then when they shift it, they'll shift it. And that's all that we know. So still it all comes back down to supply demand. And that you can't really hide too well, because if people are buying it, it goes up, and if a huge supply crunch comes in, then it's going to go down, and that's the main thing that makes it move based on whatever. Could be news, could be rumor, could be gossip, could be FOMO, could be FUD. All these things play in. So I listen to it all, have the information in there. And there's a few people that I trust and I talk to, and I think they have a good head on their shoulders and they're kind of tapped in. But again, I do the best that I can, and I'm just very much aware that it's at this point for me, it's mostly about locking in profits, because I've already got so much in profits already. So I just don't want to give it back. And I'm taking little positions and little projects that still haven't pumped yet, that I think the public may come into and find a lot of enthusiasm around that, and could just be an emotional play. But those emotional plays can really move faster and bigger than some of the more logical plays. So, and I kind of treat this too like the technology revolution, where we had all the big companies we have now, we had then. So we had Amazon and other big companies like that out there. And then later on, Facebook came in and Google came in. But, that wasn't the way it was at first. At first, it was CompuServe, and it was, who else was Prodigy? Remember Prodigy for the internet? I don't know. They probably came out before you were born. But early days of the internet, it was like, AOL. And they'd send you these discs through the mail, and they wanted you to be part of the family. And again, that wasn't even really the internet. That was their little fenced in area of the internet. They wanted everybody to be part of that. Well, those were the big movers back then. And they're basically gone. I mean, Yahoo's still around. CompuServe, I don't know. Are they even around? I don't think so. AOL, I don't know. So Yahoo is, but
maybe a little bit, but
nobody. I mean, few people use Yahoo, but Google obviously came out the winner in all of that, and so that's kind of how I'm watching this right now. I'm like, okay, who's leading the pack? I'm watching market cap very carefully. So that's a fundamental. You're talking about fundamentals. So that's one of the big things that I watch is market cap. And so I'm watching, okay, who's catching up, who's at the top right now. So for gaming, it's Axie Infinity. For like Bitcoin is the big one, of course. It's kind of like the Google, I guess, right now. But that could all shift, and Ethereum could bypass Bitcoin, or you've got other markets that could overcome Ethereum, because if anybody's traded NFTs, they fully understand the gas wars and how horrific they are. And so you got ADA waiting, you got Solana waiting, you've got even Algorand, and others that have, well, they just don't have the gas fees, and that is a huge thing. So we'll see. Nobody knows. I just watch the data, and whoever's winning, I jump on that, and then I look for a shift. Okay, oops, this guy's taking the lead now, almost like a horse race, And so as this one starts to win, I'm like, okay, let's shift the money over there. And somebody else comes ahead, shift the money over there. And then I'm waiting for the whole thing to collapse, because same thing happened, with the tech bubble. Even Amazon, all these big, huge companies, they all collapsed, and they were all on fire sale. And many of those companies, not like 95% of those companies went out of business. Well, I think 95% of these crypto coins are going to be gone. 95% of the NFTs are going to be gone. They're going to crash and burn. So then you just watch for the bottom. That's when a really great opportunity is going to be, maybe a year from now or so. Who knows? Well, again, we have to watch. And then as it comes down, you start looking for, okay, who survives? Who survives during that time? I think that right now, people don't have to worry about, in my opinion, at least missing out. There shouldn't be any FOMO right now. This thing is still brand new, all brand fresh new. The next crash is going to be, I think, an amazing opportunity to get into Web3, as they call it. And that's when you look for, okay, who survives this crash? And there's going to be huge opportunities to buy things, like I said, on fire sale, and then great opportunity to become really tremendously wealthy, for people to make millions and millions and millions and millions of dollars. And I think that opportunity is there for pretty much everybody, even people who don't have a lot of money, to be able to get in and then 10 years later be millionaires, multimillionaires. So a little patience, and again, just watching market cap and keeping your eyes open and your ears open. And I think it's just like probably the best financial opportunity for the average person for a long time.
How do you identify after a crash in the market who's going to survive and who's not going to survive? Because some people could be tempted to, they see a crash, they would buy right away into different coins and different currencies. How do you know which one will work out and which one will just go to zero?
Well, I think again, you just have to watch the tokenomics and what's happening. Like I think some of it will be very obvious because some will just be gone. So a lot of them will just disappear. And, I'm a chart reader, so I'll be watching the charts, and I use relative strength charts where on the right side, instead of putting price, it's a percent change chart. And so then I will plot just a whole bunch of different, in this case, crypto coins, and I'll put them all on there at the same time, just drawn by lines, no indicators, no nothing. But I can see by price percent change, okay, which ones are dropping the most, and then which ones start to outperform the others. And so it's really a very simple tool, but it's super powerful. I make a lot of money with this technique. And so this is the way I've been investing in cryptocurrencies right now too, as well, is because again, it's whatever's moving, that's where I want to be, but I want to be in as early as possible. So I'm actually looking, when I do that, I'm looking for, so let's say you use Bitcoin as your benchmark, like people with stocks use the S&P like their benchmark. So I use Bitcoin as my benchmark, and then I watch for certain coins to underperform, and then just start to come up toward Bitcoin again. So they're actually outperforming, even though the line of the coin is below it. And that's how you get it early before it breaks out and everybody follows it. And, you got to be nimble. You got to keep your head on a swivel and be willing to get in, get out, get in, get out, and adjust your positions. And then, the ones that keep going, you just stay in. And some that have, temporary moves up and then they falter, well, then you just get out of those. And usually that temporary move up is enough. You can lock in some profits. If it goes back down, you can still make a little bit of money. And again, there's not that many, like in the space of DeFi, there's not really that many great competitors. We all know who they are. And so I'm invested in all of them. And then it's just a matter of shifting balances, shifting money from one to the other as one starts to overtake the other. And, and then being involved in it too, like being involved in NFTs, I personally experienced the frustration of Ethereum. And it's just, crazy how much you pay in these gas fees. So I used to do some minting on NFTs, and I've stopped doing it because it's just too expensive. So then you flip the NFT around. You don't even know it's not revealed yet. If you mint it, so you don't know what the rarity is. Then later you find out it may not be a very rare coin or a very rare NFT. And so now I only buy NFTs after they're already minted and on the secondary market. I did get a couple of friends, Gary Vaynerchuk's. I did participate in that auction, and I got those like at the lowest price they were ever offered. And that's just worked out incredibly well. So, but that was because, again, now that's a bit of, fundamental analysis in the sense that Gary Vaynerchuk, I just really believe in him. I really personally believe that he's a very sincere person and that he's very ethical and that he will bend over backwards to make that project a success because he cares about his people. And so I got into that, not because of the art, because the art's like, it's cute, but it's not, the best art. But that's okay. I got in because of him. And because as he explained what he was doing with NFTs, building a community, building utility, all the stuff people were going to get, all the benefits. And even though he didn't reveal all the specifics of what that was going to be, I totally bought into the concept that, before that, most people were it's like, well, okay, here is a pixel, or here is a pixel image. And like, I don't know. I think it's a fad for avatars. Now, I understand NFTs being contracts will have around forever. But just as far as the pixel art, I didn't really buy into that, which maybe I should have with, CryptoPunks and a few other things like that. So I missed out on those. But with Gary V putting his community first, giving it utility, putting on events, every year for 3 years, VCon, which I'm sure is going to be amazing just because of him. I bought one where I get personal access to him. So that's, very, very powerful. And So, when I look at projects like that now, I look deeper into them and look at the people. So I don't like NFTs where they don't tell you who the people are behind the NFTs. If it's anonymous, I'm not interested. That's like, there's no good reason for that as far as I'm concerned.
You mentioned that that percentage change chart. Is it something you can get on like any trading platform, or you have to do it on the side with your own data?
TradingView has it.
Okay, interesting. I've never seen that before, so I'm really curious about it. And could you apply the same principle of this to other markets, like let's say futures or forex, or is that only really made for like trading markets and cryptos?
No, you can put any market you can do it on. I can tell you how to do it real quick. Just I can't show you visually, but it's super easy. So on TradingView, all you do to give people instructions is you bring up a chart, and then you go down to the bottom right-hand corner, and you
just saw that, the percentage.
Right? On the percent. Yep, the little percent sign there. Then what you do after that is, so you just want to have one chart up, okay? And so you click the little percentage sign down at the bottom right. And then at the top, kind of left, there's a thing there that says compare in the top navigation bar. Do you see that button? Yeah. And so you click on that, and that's where you can add more stocks or forex pairs or cryptocurrencies or whatever you want. And so you can add a whole bunch of them there. So like on mine right now, let me bring up my layout. So, and I do this for cryptos, and I also do it for my long-term investments. So, you know, because I have a pension plan that I manage, that I'm the trustee for. And so like right now, for example, okay, S&P, I use this as my benchmark. So right now, as I look at it, I've got, I don't know, like 30 different ones here. And so I'll put things on there that are like, that I think are going to be moving, you know, soon, or that have potential. So like, let's take, for example, I see, I got my crypto one on here. So right now, yeah. So Matic, for example, on cryptos, Matic is going up. That's awesome. I bought a bunch of that. Engine, yeah, that's another one. That's a gaming token. That's kind of like the S&P 500 of gaming crypto. Chainlink. What are these over here? Yeah, Engine. And that's Engine too. And this one is Matic. Okay. And then you get your underperformers now. So like AMP. Okay. So AMP, I'm watching very carefully because it's underperforming. And that's what I like. I like to then watch underperforming markets, in this case of crypto, and then catch it if and when it comes back up. So buy it, discount. So once they've taken off, then it's too late. I'm not interested in that. I want to catch them just as they're shifting. I'll even draw trend lines on these line charts, and then buy into them. ADA, same thing. ADA, again, ADA could be an Ethereum killer. I don't know if it will or not, but right now it's not following the rest of the market. It's just kind of sitting around, you know, watching everybody else move. Well, that's cool. So then I'm going to watch ADA and look to see if it starts to move as well. Yeah, Chili's gaming token. And then over on, let's see, just get people some real stuff here. So for my stocks, I'm looking at, let's see here. Oops, wrong list. Here we go. So yeah, with stocks. So a good example of this is like, I don't know, are you familiar with Cathie Wood?
Yes.
Yeah. So, you know, she's kind of always looking at disruptive industries like, you know, robotics and including cryptos and all that kind of stuff. And so that's all good. She owns the ARK fund, or she manages the ARK funds. And those are good. So I'm always watching those, but, you know, she's so ahead of her time with all of this. And so to me, it's like, yeah, I agree with her philosophy. These things are going to, you know, be dramatic life changers and world changers, but it's a matter of timing. So you gotta watch them in their timing. And so I've got them on my watch list, but you know, let's see what they do. So I've got all of these like disruptive technologies on my watch list, but which again, it's all about the timing, because a lot of like her ETFs and so forth have not really performed very well. So, but I think they will. They just haven't right now. So, yes, I'm looking over this here. So, I'm looking at security. That's another one. Internet security. That's going to just keep getting bigger and bigger and bigger. So, I'm watching that. I'm watching anything to do with crypto. I'm watching. Always watch the big ones like Amazon, Netflix, Google. I'm always watching those kind of the big tech stocks. Facebook. I think Facebook could really transform itself. I don't like Facebook, the product, at all. But I think Facebook is very smart. They've got a ton of money. And I think again, I don't know. I don't have any insider information, but I'm just watching them to see if they do what I think they'll do, which is transform themselves with, like a metaverse project. So the metaverse is going to be huge into the future. Now that's another race. Who's going to win that game? Literally. And Facebook has a chance at it. So will they do it or not? I don't know. We'll see. But so I just watch the charts, and so anything to do with metaverse, I'm watching very carefully. Anything to do with clean energy, I'm watching. Lithium, I'm watching, because of all the a lot of mandates that automobiles have to be 100% electric by a certain year, and that varies from place to place in the world. But anyway, lithium is going to be in big demand. It already is. So anything with electronics like that, technology, security, 3D printing is going to be huge, I think. Again, these are just my thoughts. So I'm watching them, but I don't just buy because I think, oh, that's going to be huge. It's like, yeah, that could be huge, but it might take 10 years to be huge. So these things take a while. And then there could be, government intervening and saying, oh, no, you can't do that. Now the US here, where they're thinking of coming out with a digital US coin, because, of course, they want to make sure they keep track of everybody's money so they can track everybody and tax them. So how's that going to work out? Well, I don't know. So you just watch the charts and you see, and you keep your eye on the news. And, that's trading. It's very, it's not static. A lot of people like to get an idea like, oh, I'll just trade a head and shoulders pattern, or I'll just trade a triangle, or I'll just trade double tops, or I'll just trade, whatever, cup and saucers. So this is very static thinking, and static thinking doesn't work in trading. So trading is ever evolving, ever moving, ever flowing. Nothing ever stops. It's constantly in change. And so you have to have a very elastic mind to always be just, it's almost like Tai Chi. I've done a lot of Tai Chi in my life, and now I do the martial arts Sistema, and it's very much feeling the other person's energy and going with that. And so having that experience in both of those martial arts, I think, really helps me in trading, because first of all, I resonate with that very much and always have. And then I just feel that's how trading is too. I just get in touch with the energy of the markets, whichever market I'm watching, whether it's forex or cryptos or stocks or whatever. And I just kind of match that energy, get a feel for it, and just kind of go with the flow. And I don't try to dominate the market. In fact, I gave a talk a couple of weeks ago, and I was talking about how people who sometimes very, very, very successful people in business make the worst traders. Sometimes they have the biggest challenge. And the reason is because they're very dominant personalities, usually type A personalities. And so they like to dictate, they like to control, they like to dominate. They like to say, I'm going to make this happen. Okay. And that can work very well in business. You need that in a leader. That's awesome. That's the right place for them. But in trading, you don't make anything happen. Right? I can't make anything happen in the financial markets. You can't. No one person can. So bringing that type of personality into trading is very detrimental and very frustrating for the person. You don't make anything happen. So you got to get out of that mindset, or do something else. Go start another company, or whatever. So
it's definitely interesting because the fact you mentioned that business owners tend to make worse traders. I thought the opposite. I thought that
when you are in business, you kind of learn skills that can help you a lot in trading after, like being able to work on your own schedule, being able to get things done. So I don't know. You think employees are able to be better traders than business owners?
No, not necessarily. I don't. That the two don't really. They're not. There's not a juxtaposition between the two. It's just certain personal characteristics is what it comes down to. So yes, for someone who is a business owner, the characteristics of self-discipline definitely help them in trading. The characteristics of being able to set, a schedule, of being able to track things, like tracking your metrics in business, tracking your finances, and then tracking everything you do in your trading. So those characteristics, yes, would help a business owner in trading very, very much. So I was just talking about the personality trait of people who want to lead and make things happen. Right? Where I'm going to take, there's people who are very good at business who are turnaround artists, and they can go into a business and they can turn it around. They can make that happen. Okay, well, in trading, you're not going to make any financial market. You're not going to make the euro do anything, right?
Right.
It's not going to happen. You don't have that power. So that's the thing I was talking about, was that personal characteristic. Now, if a business owner has the ability to, and by the way, they say actually good leaders also are great followers. So for those who are great followers as well, then yeah, that characteristic, then they can bring that to the market and possibly do very well. So other people that I find, and these again are generalizations, right? There's many exceptions to the rule. But again, it just goes toward some common characteristics. So for example, people who are MDs, engineers, CPAs, I have found, and by the way, I've shared this, or I've had other people share this with me as well, who are teachers. They say, yeah, we have a hard time with those people as well. And again, it's if they have the characteristics where they're perfectionists. So now an engineer needs to be a perfectionist, right? Because if they're going to design a bridge, that bridge better be god darn perfect. Otherwise, people could die. So that serves them exceptionally well in that profession. But when it comes to trading is not so cut and dry. It's again, always fluid, always moving. And so if you expect perfection, well, you're going to be very, very disappointed. You're never going to catch the end of every move. You're never going to hold on to the end of any trend. You just, that's why I find that some of the best traders actually are poker players. Poker players, again, generally make great traders because they're not perfectionists. They're used to managing risk. Now I'm talking about professional poker players, the good ones, not the bad ones. But, they've learned that, okay, I can't control what cards are dealt me. Same in trading, right? We take the cards that are dealt us. That's beyond our control. All we can do is evaluate, okay, I got these cards. And then, okay, statistically, now what are my odds here? Okay. And most professional poker players will fold most of their hands because they just say, well, odds are not in my favor on this hand, I fold. The amateurs, they play more hands than they fold. Professionals fold more hands than they play. And so the patience comes in. I would say, one of the primary personal characteristics of a professional trader is patience and waiting and waiting and waiting. And that's the same with the poker player. But then when they get the odds on their side, then the poker player will definitely play that hand. And then over a large sample of data. And that's the other thing. They know how to manage their money, manage their pile. I'm not a poker player, so I don't know the correct terminology for all of it, but they're chips. And they know how to manage their portfolio or their account size and all that kind of stuff, like we would say on trading, and to allocate so much toward a certain hand as we allocate a certain much toward each trade and risk so much per day, per week, per month, per quarter, per year. All that stuff's very, very important. And poker players get that, because that's what they do. And they know it's just all odds and statistics. And like I said, again, they can't make anything happen. So they're the ones that survive. And, and then when they have a really good hand, then sure, they'll allocate more money to that hand. So I was listening to a trader just yesterday, professional trader, and he said, I'm only looking for 2 great trades a year.
Wow.
And this guy makes millions of dollars a year. And now he takes more than 2 trades a year, but in his mind, his expectation is, with all the trades I take, I'm going to get a lot of little singles, to use a baseball analogy, or a few wins, few losses, few medium wins. Okay. But the way I make millions of dollars every year is on like 2 trades. And that rang true to me. When, 2020 came along. Can't say the C word here. Otherwise we might get, might get blocked by some social media. But anyway, when that came along, that was my trade of the year. I caught the top of that trend and rode it all the way down. And markets tend to move down faster than they move up, and it sure did. And then when it came down and it made its second cycle low, it was a higher cycle low, and I bought back in, and it went all the way back up. And those were my 2. Again, I made more trades that year, but those were my 2 monster trades in 2020, and they were just huge.
And that kind of shows you have to be flexible too. Were these trades following exactly what you usually trade in your strategy, or were they kind of a bit different and a bit flexible from what you tend to trade normally?
Oh no, they were my usual trade strategies. Mm-hmm. So the first one was a trend reversal trade, and then the second one was a momentum shift trade. And so, yeah, I almost nailed. Boy, I'll tell you, I wish I would have. I almost bought the very, very, very bottom in 2020, and I was there, and I was like, I see everything. It looks perfect. This looks like a great trade. But it was, a little higher risk than I normally take, but it was one of my setups. But it's a high risk setup, but I knew it would be a high reward as well. And I don't regret it too much. It's just that it would have been a nice story to tell if I nailed the bottom of it.
Right.
But I turned down the trade and decided not to take it because it was, a little riskier. And then the next cycle low, which was a higher low, that was a no-brainer. That's what I was waiting for, and we got it, but had to buy at a higher price. But yeah, I saw that low, and I was like, maybe I should just put on a little bit. But, the truth is that same setup taken 100 times would probably lose like 70 out of 100 times. So it's just, I would have gotten lucky that year. But I do miss not having that story to tell.
Yeah, sure. But it's still pretty good. What would you tell people who are either new to trading now or getting into trading since fairly recently? What would you tell them to focus on and kind of look at right now?
Look at, as far as what, markets, education, psychology.
Yeah, markets, pretty much everything of it. So there's going to be a part of like non-market for sure. Should they look at cryptos, or should they go into trading, whatever they prefer?
I would not necessarily recommend cryptos. They really do behave differently than other markets. So, and they're so volatile and they're so risky that I think if I was interested in getting into crypto, I am, but if I was a new person interested in getting in crypto, I'd watch every day. I'd listen to people, I'd get educated from now until, maybe next summer. And you got to get educated, and then use that time to start saving up some money that you can put aside and money you can afford to lose. So that's what I would do. Right now, it's pretty late in the cycle, in the 4-year cycle. So kind of feel like it's the primo time to get in, that's behind us already. So right now I feel like they'd be chasing the market. Not that they couldn't make money, but I'd look other places. So it depends what they want to do and what their lifestyle is. I like day trading. But most people can't do it because they have to work during the day, which is normal. But the nice thing is you can still day trade. If you want to trade spot Forex, you could trade a currency pair that's on the other side of the globe of wherever you live. And then when you're not working, and the sun is shining on the other side of the globe, you can trade that currency. So that's the big advantage of Forex that I love. And plus it's leveraged, which I personally love. Of course, that's a double-edged sword, but I love to trade leveraged instruments because you make money faster. You can trade the E-minis after hours, moves a little slower, but still, even on Globex, it moves pretty good. There's enough liquidity that you can still do that. Swing trading is good. It's a slower lifestyle, and it's an easier lifestyle. You don't have to spend as much time. And I think swing trading, when I say swing trading, I mean like trading a daily chart. Okay. So if you're trading off of a daily chart, where each bar represents 1 day of price action, then you can spend maybe 30 to 60 minutes a day trading, and that's it. And you can do it anytime you want. So after you get home from work, you look at your charts, get a cup of coffee, tea, beer, whatever you like. And, it's a nice lifestyle. It doesn't, and also it's psychologically a lot easier. So day trading, I think, is much harder psychologically, much harder. So, I mean, like 100 times harder than swing trading from a psychological point of view, because you got the time pressure. So, just depends. But if you're going to swing trade stocks, you're not going to make as much money. They're not as leveraged. And that's why when I swing trade, I don't really swing trade stocks. I swing trade the options of the stocks. So, and options are, everybody says they're risky, and they can be, but if you learn, again, get educated before you start trading with real money, then options can be great, because you don't have to have as much money. So you can, like if you just buy a call, I mean, you can have an account with just $100 or whatever, or $500. I don't know. Depends on your brokerage firm. And, get your feet wet and get in there and start making some money. So, but again, education. Don't invest any real money until you get educated.
Awesome. Speaking of which, I know you published a few videos about options on your YouTube channel recently, so people can check that out. We'll try to link that below the video.
Yeah. People can just go to YouTube, and in the search bar for YouTube, just type in TopDogTrading options, and my options videos will come up in the search. And they can also write me. My email is barry@topdogtrading.com. So if people are interested in any of the stuff that we're talking about here today, they can just send me an email and ask questions, or they can always go to my main website, TopDogTrading.com. And I've got a blog there with all years and years and years of articles and videos on my blog. All of it's free. Also, they can sign up for a free webinar where I give away one of my favorite indicators, my cycle timing indicator, where this is the indicator I use on every single trade to get in. No matter what I'm trading, whether it's head and shoulders, double tops, trend trading, trend reversal trading, I use the same indicator to enter every single trade I take. And this is for stocks, forex, futures. It's the kernel. It's really great. And I give that away for free with an hour-long tutorial. And again, if they just go to Top Dog Trading, there'll be a little banner at the top. They can click on that. And because it's a recorded webinar, they can watch it whenever it's convenient for them.
Very interesting. We'll make sure to put the links below the video here if people check that out. Thank you, Barry. It's good to talk to you again. Good to see that you're still there, still making a lot of progress in trading, which is awesome. And I look forward to catch up with you again in the future.
Great. Well, thank you so much for reconnecting. It's been my pleasure. And I appreciate all that you're doing for the community too. I talked about education being so important earlier, and I really respect and appreciate all of the education you're providing for the community. So thank you for doing that.